Real estate investing is just one of those things that everybody wants to learn eventually, but it's just too complicated and they just never get around to it. There's so many gurus out there that'll tell you that wholesaling is the best, flipping homes is the best, buying foreclosed homes is the best. Like, everybody has their idea of what the best investment is. But at the end of the day, who wants the headache of doing all that work, am I right? So let me share with you what I think is one of the most powerful and yet simplest ways to invest in real estate. And no, this strategy does not require you to go start some business that's gonna take up like 20 hours of your week. The great part is that if you own a primary home, you might already qualify for this strategy and you might not even know it. Also, if you're new here, my name is Michael. I am actually a full-time software engineer in the Bay Area and a part-time real estate investor, and I teach people why they should invest in real estate while working at a full-time job. In 2022, I saved over $80,000 in federal income tax from my W-2 job because I invested in real estate, and I did so on the side. The best part is I only spent like 1 hour a week, if that, for the entire year. Now, obviously, nothing is 100% passive, but if you compare the dollars per hour that I made investing in real estate compared to the dollars per hour that I made from my W-2 job as a software engineer in the Bay Area, the dollars per hour investing in real estate is exponentially higher than the dollars per hour made from my software engineering job. And that's why I make these videos, is because I want to convince people just like me to get into real estate investing part-time. I don't sell any online courses about real estate investing. I just share what I am personally doing and what I think is the best option for people who are in my position. So if you share any of the same financial goals as me, then you can follow along, and I'm going to be sharing everything that has been useful for me up until this point. And if you want to talk to me more, you can schedule a call. The link is in the bio. So with that said, let's dive right into this strategy. The centerpiece of this strategy is a concept called Section 121, which is basically a tax code. Here's how it works. If you lived in a primary home for 2 out of the past 5 years, you can sell that primary home and keep $250K if you're single or $500K if you're married of capital gains tax-free. So if you took today's date and you go back exactly 5 years, as long as you've lived in that primary home for at least 2 out of these past 5 years, you qualify for Section 121. And again, that means that if you were to sell that home, then you can keep $250K or $500K if you're married of capital gains tax-free. It's the best tax benefit given to primary home owners, and most people don't even know it. It's such a good benefit that a lot of people actually formulate the entire strategy of where they live based off of the Section 121 tax code. So let's see how we can strategically use the Section 121 code to grow your net worth in the laziest way possible, using a strategy that I like to call the LeapFrog Method. The LeapFrog Method is a long-term strategy, so we're gonna walk through a perfectly executed 10-year scenario so that you get an understanding of how this works. And I promise it's not that complicated. So let's start off at year 0. In year 0, you are gonna go buy, let's just say, a $500,000 home for 20% down. That's $100,000, and you're gonna live there for exactly 2 years. For year 0, that's all you have to do. Pretty simple, right? So you might be wondering, why do I have to live there for 2 years? The answer is that you are trying to qualify for Section 121. So that's all you have to do for the first 2 years of this strategy until we get to year number 2. Now, at the end of year 2, you've now lived in home number 1 for 2 years. So you could qualify for Section 1 today. But instead, you're gonna go rent out home number 1, and you're gonna go buy another $500,000 home for $100,000 down. And from years 2 to 5, you're just going to live in that house and you're going to wait. Now, at the end of year 5, this is going to be the first critical point in this LeapFrog method. And this is where things are going to start getting interesting. Now remember, you lived in home number 1 from year 0 to the end of year 2, and you rented it out for another 3 years. So if we look back 5 years, you've lived in it for 2 years and rented it out for 3. You qualify for Section 121. So now that your home is worth $600,000, you're going to sell that home and pocket a $100,000 profit tax-free, and you're going to get back your original $100,000 down payment. That's going to leave you with about $200,000 of cash in your bank account. So let's take a pause here and see what your current situation is. So again, you have $200,000 in the bank, didn't pay taxes on any of that profit, and you have home number 2, which you've been living in for the past 3 years. So what do you think the next move in this strategy is going to be? You guessed it. We're gonna take that $200,000 of cash and we're gonna go buy home number 3, and we're gonna go move from home number 2 and we're gonna go move into home number 3. And guess what we're gonna do with home number 2? We're gonna rent it. So for home number 3, because we had $200,000 to spend, Maybe we put down 20% down on a $1 million house. So we just talked about the end of year number 5. You should now own homes number 2 and number 3. Now let's fast forward another 2 years to the end of year 7. At the end of year 7, home number 2 has now reached its 5-year ownership period, and you've lived in it for 3 out of the past 5 years. Now again, we're going to assume that home number 2, which you bought for $500,000, 5 years later is now worth $600,000. So that means that you're gonna get back your $100,000 down payment, and you're gonna get a tax-free $100,000 back because you sold using Section 121. Let's take a pause here and see what our current situation is. So again, you have about $200,000 of cash sitting in your bank account tax-free, and you own a $1 million home number 3, which you've been living in for about 2 years now. So again, what do you think we're gonna be doing here? That's right, we're going to be taking that $200,000 and buying home number 4, which again is going to be a $1 million house. So we buy the home number 4, move into it, and we're going to rent out home number 3. Okay, fast forward from the end of year 7 all the way down to year 10. Now, home 3 has reached its 5-year ownership period. Hopefully by now you kind of understand this pattern. The idea is that you're going to live in a home for 2 to 3 years, and when it reaches that 5-year ownership period, you sell it and use the sale profits to go buy the next home. That's why we call it the LeapFrog method. But the thing you have to understand is that this cycle, this LeapFrog method, is a continuous cycle. So how do we get out of this cycle? To answer that question, let's take a quick snapshot of where we stand at the end of year 10. You've now lived in home number 4 for about 3 years now, and you've reached that 5-year ownership period with home number 3. So we're going to sell home number 3. Again, we're going to assume that home number 3 that you bought for $1 million is now worth $1.1 million, and you're going to pocket a tax-free $100,000 of profit. Now remember, you bought that house for $200,000 down payment, and you're collecting a $100,000 tax-free. You're going to have about $300,000 of tax-free dollars in your bank account. Now from this point, you really have 2 options. You can continue the LeapFrog cycle by using that $300,000 to go buy another primary home, home number 5, and go move into home number 5 and rent out home number 4. But let's just say that you're content now. You're too old to move, you don't want to deal with the headache, and you just want to stay in the home that you live in right now, which is home number 4. Option 1 is you can cash out. At this point, you can take that $300,000 of cash and you can go buy 6 $200,000 cash flowing property. When rented out, these homes can cash flow, let's say $500 per month. So if you buy 6 of them, you're looking at about $3,000 of cash flow, and you have a property manager in place, so you don't have to do that much work. So if you chose this method, let's take a quick snapshot of what your life would look like now. You own home number 4, which is worth $1 million. It's probably a really nice house, and it costs you probably about $5,000 to own that house. And you now have 6 rental properties that bring in about $3,000 per month to pay off pretty much a majority of your monthly cost on that home number 4. To be honest, that is not a bad situation to be in. And who knows, maybe in another 5 years or so, your home number 4, your primary residence, might go up to $1.1 million, and maybe you might want to decide then if you want to use Section 121 and sell it for a tax-free profit again. And secondly, the alternative to cashing out is to continue this LeapFrog cycle. And I'm not going to explain this again because I think you understand the concept by now. So all in all, Section 121 is a great tool if you want to grow your net worth fast without having to do that much work. Now, this LeapFrog method is a very popular strategy, especially in high appreciation markets. Now, I gave the example that if you bought a $500,000 property and waited 5 years, that it would go up by, $100,000. But in some high appreciation markets, we've actually seen much higher appreciation rates than this. Imagine if you bought that same home for $500,000, but instead of it appreciating to $600,000, it appreciated to $700,000. That would be $200,000 of tax-free gains that you would be able to collect. And that's one of the reasons why Californians are so rich, is because they buy primary homes and they just sit on those homes and wait for those things to appreciate, and then they sell it using the Section 121 code and pay 0 taxes on any of it. So hopefully I've shed some light on how regular people like W-2 employees and not full-time real estate investors can invest in real estate and grow your net worth using this LeapFrog method. It can be a really great strategy for some, but obviously some people don't want to move every 2 to 3 years. So if that's you, maybe the strategy isn't for you, but it's a strategy that my wife and I are considering using in the near future. So if you made it to the end and you found value in this video, please give me a thumbs up and subscribe. It really means a lot to this channel. And if you guys want to go watch my other videos, I talk a lot about other strategies that you can use to grow your net worth even faster and reach financial freedom at a young age. And if you want to talk to me personally, I do offer one-on-one strategy calls. The link is in my bio. If you're new to real estate investing and you want to learn more, you can definitely contact me there. Thank you guys so much for watching, and check out my other videos about strategies that can help you grow your net worth in real estate investing. So thanks, and see you guys in the next one. Peace out, guys.